But what will be really important is it'll be products that you want right through your life stage that we're answering, rather than ones that we think you want.
Hello and welcome to the Banker's Masterclass on the value of transforming banking operations. My name is Brian Caplen, editor of The Banker, and I'm here with Martin Boyle, who's the Divisional Director Business Transformation with the UK's Nationwide, and also with Hugh Morris, who is Genpact's Vice President of Banking, Financial Services and Insurance. And we're now going to talk about sort of the future business opportunities coming out of transforming the bank. And Martin, I think one of the key things that you've mentioned is that, you know, the relationship between banks and customers is changing, and you're going for more of a kind of life cycle relationship rather than just a product by product relationship. Is that right?
Yeah, absolutely. I mean, one of the things that we're wrestling with, and I think a lot of retail financial institutions are, is how do you make what in essence was the secret sauce of retail banking, that advice, that trusted relationship, relevant in the 21st century. And I think technology has a real role to play in that. The ability for you to deliver advice remotely, either through when you're sat at home or in the branch. And I think that's something you will start to see evolve. Another key opportunity would be around how you address payments. It is a bit like the Wild West at the moment in terms of different payment solutions. I don't think anyone really knows who's going to win out, but at Nationwide we're absolutely committed to taking some bets on what ones we think will be successful, allowing you to be able to pay me with your mobile phone. I think if we get some of those things right, you increasingly will start to see that relationships being reinforced rather than removed and weakened.
Okay, now Hugh, I mean, we've talked about payment solutions, and there's all, as we say, lots of different kinds of solutions out there, lots of different kinds of providers, and some ways they look like a threat to the banks. So how do the banks deal with that? I mean, do they need to kind of work with these folks, or do they just need to say, go away, don't bother me?
Well, I think it's fascinating that a bit of the infrastructure has become a product in its own right. And one looks at some of the payment providers and all the services they're offering, like you have all your different payment options in one place and you can use them. We're starting to see loyalty schemes become very important parts of that, both for end customers and for the merchants themselves. So we're seeing that at almost every point in the value chain, there is an opportunity for a product or service to emerge from what was perhaps traditionally hidden infrastructure. And I think the banks have a critical role in this. There are a number of people fighting for who knows most about the payment space, but obviously by controlling a customer's cash assets, the banks will inevitably know a fair amount about it, as do the credit card providers, as do the payment services. So I think we're going to see some competitive dynamics in that space, and it's impossible to foresee the long-term winners, but as Martin says, a number of institutions are starting to take a stake in the game and say this is where we're going to be and this is what we're going to do.
Now, the other advantage the banks have is data, don't they? So they have huge amounts of customer data. I mean, is there a lot of opportunities for using that as a way of targeting particular customer segments?
I think there is, and I think predictively understanding what the information tells you about future potential behaviour is one of the most interesting areas to explore. We've been held back rather by the tools for some time because the data is stored in so many disparate systems. Building data warehouses to get everything in one place has been very expensive, very slow, very time consuming. But the tools are getting nimbler now, able to extract information from core underlying systems that may be in different formats and start to make sense out of it using fuzzy logic type of matching, and therefore turn that data into information. And I think we are just at the very small tip of a very large and exciting iceberg there.
So Martin, in this new era, we've got lots of sort of exciting players around, people like Amazon, who really have grown up on the internet and know how to use it. I mean, how much can they be a role model for banks, or do banks have to just completely rethink the thing out and do it in their own way?
I think the banks that'll be successful in the future and the financial institutions that'll be successful in the future are the ones that are out there scanning the horizon and talking to the likes of Amazon and Google. They have become the masters of retailing through personalization in an online way. I think, as Hugh mentions around, we're at the tip of an iceberg, especially in retail financial services, in trying to understand the information both I hold inside the organization about you, but what I can find out in 3 or 4 seconds by doing a search across the internet quickly, combining that to then give you something which is relevant at the point in time you talk to me. That's what we've got to learn from the Amazons and Googles. But what they've got to see when they look at us is we are a financial institution, typically that is trusted more in the main, and we have that network on the high street that actually has some value. We all talk about becoming a digital institution with a retail presence, but that high street presence is valuable, and it is a really important manifestation of a brand.
Okay, now things are moving really fast at the moment. I mean, what will banking look like, or how different will it be in, say, 5 years from now?
I mean, I think one of the key trends will be increasingly people will do more and more online. You know, we're predicting that sales will grow from 34% online to more akin to 60 to 70% online. There still will be, in developed economies, there will be a branch infrastructure. I've absolutely no doubt about that, but it will shift from being about transactional sales and service to one about help and advice. That advice you get will be more relevant in the 21st century because you'll be getting it either in the branch or at home. But what will be really important is it'll be products that you want right through your life stage that we're answering rather than ones that we think you want.
Okay, and Hugh, same question to you. In 5 years' time, what's going to be different about banking?
Well, I think the first thing in 5 years' time is defining retail banking will be much more difficult than it is today, because I think it will contain a heterogeneity of services that may be related or even unrelated. And I think we're talking about, you're already starting to see embedded products within a retail banking environment in terms of insurance add-on, loyalty type programs, but you could see a very different world emerging where the whole key to how that retail financial relationship is maintained is in a very different context from the way it is today. So it could involve retailers, it could involve insurance products, it could involve multiple payment systems, it could involve many things that actually say, where do you draw the boundaries of the definition of retail banking in 5 years' time, I think will be much harder to determine than it is today.
Okay. Hugh and Martin, thank you very much for sharing your thoughts on how to transform the bank.